People often question, is the global reserve currency good for America? That status basically empowers certain parts of the economy and then it hurts others. And so, for example, if you're in Washington, D.C., and you want to be able to sanction almost anyone in the world, it's nice that everyone's using your ledger. It makes it harder for any entity to go around it. You get a lot of leverage that you can basically pressure other countries with. You have the rest of the world financing part of your deficits because they have this kind of structural need for assets. It's generally good for the stock market because all this capital, what countries do with it, there's often this thing that people say, well, we're sending them pieces of paper and they're sending us goods and services, which is true, but then there's one more step. With those pieces of paper, they go and buy our financial assets. So they buy our stocks, they lend to our corporations, they buy our private equity, they buy some of our real estate. So what we're doing is we're selling portions of our appreciating assets to the rest of the world, and we're acquiring some of their depreciating assets, goods and services. If you're in the dollar export business, basically, which is a combination of Washington and New York, that's great. If you're in a high margin industry like tech, healthcare, you're maybe not super benefiting from it, but you're not really harmed by it either. You get a lot of the privileges of having a strong dollar without a lot of the downsides. Most of the downsides hit lower margin physical industries, particularly manufacturing. That's why it's at the centerpiece. And so all these industrial towns, it's really dwindled because there's been little reason to invest in more of that because it's not very competitive. And so it hollows that out. And then by extension, I mean, if you're operating a restaurant, one of these towns, you're not in the manufacturing business, but you're in a manufacturing area. And so it's not just industry specific, it's regional specific, which is why some parts of the country have more flourished regardless of what occupation you do, and other parts have suffered. And so the problem is running a trade deficit for 1 year or a few years is not a big deal. Deficits come and go, different countries go through these periods. The problem is that when it's structural, due to the reasons I previously described, when you have 50 years in a row of trade deficits, you get a really big imbalance.